Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, April 15th, actually April 14th on Thursday, because Friday was Good Friday and the markets were closed. But for the week ending April 15th, 2022, and for this analysis we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. The chart that we're going to be working off of today is a weekly candlestick chart of the S&P 500 that goes back to the beginning of 2021. I have quite a few annotations on this chart for you, kind of bring you up to speed as to what's been going on. But let's start off with what happened this past week. The S&P 500 on this shortened trading week, again, the market was closed on Friday, so we only had trading on Monday, Tuesday, Wednesday, and Thursday of this past week. We were down 2.13% on this shortened trading week, and we finished at 43.92.59. Over here in the right-hand side, this is the candle from this past week. And what we can see is that over the past 4 weeks, we have been rejected on a weekly closing basis at this line right here, which is the 45.50 line, okay? So we've come up to this area, and we now have been rejected. Yes, intra-week, right, during the middle of the week a couple weeks ago, we had trading as high as 46.37.30, as we can see right here, but on a weekly closing basis, and remember, where the market closes on a weekly basis is more important than where it closes on a daily basis. And of course, where it closes on a daily basis is more important than any intraday trading that we might have. And we can see here we've been rejected at this 45.50 level, guys, and we're starting to pull back. Now, this felt like a bear market rally to me, even though technically we have not been in a bear market for a couple of years now, right? The maximum drawdown, 48.1862 down to 41.1465. So here's our all-time intraday high here on January 4th of this year, and we pulled back to as low as 41.1465 on February 24th. And I just have this memorized. I don't have it exactly annotated, but those are the dates. January 4th to February 24th are these numbers. And that's reflected right here in this annotation where you see my cursor circling. Is we've had so far a max drawdown during this downturn of 14.61%. But guys, when we have these huge moves off of a technical support area, again 4,200, right, is this line here, and we had about 10 weeks of trading or so from April, May, and the first half of June of 2021 around this 4,200 level before we pushed up to 43.50, where we played around for a few weeks before we finally got above that, all right? And I'll come back to that here in a second, because this 43.50 level is about to come into play again, and that's a very, very important support level. But this 4,200 level held, all right, the lowest weekly close that we've had during this downturn. And again, the way I think about this, guys, and these charts prove it out, the weekly closes are more important than anything that happens during the middle of the week, and anything, and the daily closes, right, would be more important than any intraday trading we might see. But on a weekly closing basis, right, we know we got down to intraday as low as 41.1465 on February 24th, but on a weekly closing basis, the lowest close we've had, 42.0431, and that's the lowest close we've had during this downturn, but also it's the lowest close that we've seen on the S&P 500 since clear back here in June of 2021, all right? So this is super important, and then we ricocheted right off of that 4,200 level and got back up to 45.50, but we've stalled and rolled back over, all right? This potentially is a very dangerous situation here, guys. This felt like a bear market rally to me. This actually started right when Fed Chair Powell started to speak right after they raised rates for the first time in several years, right? So it was just a very weird setup. And here we are starting to pull back. Now, stay with me, guys, because this stuff is super important for you to understand, all right? And especially if you have, a large 401k, or you're selling, you may be retiring, close to retiring. You're a professional, a dentist, a doctor, an attorney, a business person, whatever. But even if you're younger, in your 20s or 30s, guys, understanding this right here, understanding the markets themselves, it may not be the sexiest thing out there, but if you don't understand this, trying to pick the best stock, that's going to go up, 150 to 200% in the next move up, you're going to be missing a lot. Okay, so please stay with me here, because this stuff is super important. And remember, I have decades and decades of market experience behind me, including being a financial advisor as well as a VP for a major mutual fund company. But anyway, now that we've been rejected at 45.50 and we're starting to roll back over here, guys, this 43.50 level, right? And this is the most important support level on the S&P 500 right now. It's not going to take much at all to get us back down to this 43.50 level. The first time we ever got above 43.50 was back here at the first part of July, of 2021. And we've only had, as the annotation shows right here, we've only had 4 weekly closes below 43.50 since June of 2021. There's one right here, one right here, one right here, and one right here. That's it. Okay, so what this shows us is just how important this 43.50 level is, guys, and the fact that we're less than 50 points above it. We're at 43.92.59 right now, so we're less than 50 points where we closed on Thursday the 14th. We're less than 50 points above this 43.50 level. So if this level doesn't hold, it would be reasonable to expect us to fall down to this 4,200 level, which has held so far on a weekly closing basis. However, guys, now that we've been rejected and started to roll back over here, the potential for this 43.50 to not hold and then 4,200 to not hold has substantially increased, in my opinion, and based on my decades and decades of experience personally trading, investing money, being involved in the mutual fund industry, working with thousands and thousands of financial advisors and their clients. This is starting to really look like a potentially dangerous setup here, guys. And if 4,200 doesn't hold, then the next support level is going to be way below 4,000. And for more information on that, I want to refer back to a video I produced a month or so ago called How Low Will the S&P 500 Go? I will leave that video as well as several others linked in the description box below this video, guys. So please stay with my material for the next couple of hours. I would encourage you to, because I have produced some very, very important videos for you over the last few months. And I will leave several of those linked in the description box below this video. But I wanted to give you this setup, and I wanted you to understand what's going on right now. And I know a lot of people are all excited about this, but guys, when you see these huge candles off of a technical support level like this 4,200 level, I would be afraid, not excited, right? This isn't, especially given the backdrop that we have with everything going on geopolitically in the markets, raising rates, and everything that's out there, guys. This market right now, I feel, is potentially very, very dangerous. Okay, the markets could surprise us. 43.50 could hold, 4,200 could hold, but if 43.50 does not hold, then the next support level is 4,200. If that doesn't hold, we're looking well down into probably around the 3,800 level. But please watch How Low Will the S&P 500 Go? It's an extremely educational video. I'm going to link it in the description box below this video. And please stay with the balance of this video as well, because I have some super important information to share with you. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? If you said yes to any of those questions, the next thing you need to do is watch the How to Be More Successful in the Stock Market video that is on this YouTube channel. I will also leave a link to that video in the description box below the video you are currently watching. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? If you said yes to any of those questions, the next thing you need to do is watch the How to Be More Successful in the Stock Market video that is on this YouTube channel. I will also leave a link to that video in the description box below the video you are currently watching. This can make a huge difference in your life going forward.